Lyft is leading a stampede of unicorns headed to the public market. Companies have recently been wary of listing. Now they're rushing in. They want to beat out any economic slowdown. Off they go. They are the unicorns, making sure, yes, they are unicorns. If Lyft performs well on Friday, these tech unicorns, all with at least $1 billion valuation, will be sure to spark an even larger pack of IPOs to follow. Slack, Airbnb, Lyft, Uber. Uber's the biggie. To help us guide through this IPO mania, Paul LaMonica is in New York. Of all of those, which is the most interesting?
Well, I'm going to say Lyft because we're going to find out in one day how it does, and that will set the tone, I think, for all of those other unicorns in that little stampede that you had there. I mean, obviously, investors are very interested in this, in seeing what Uber does when it goes public, too. But first things first, Lyft is unprofitable, but revenues are soaring, as Zane pointed out. Will that be enough to justify the valuation north of $20 billion?
Are these companies on paths to profitability? I always remember that horrible phrase from the dot-com boom of the 1990s. I mean, do these companies have the potential to be profitable?
Yeah, I think that it is a case-by-case basis, but some of those companies are closer than others to profitability. I think with Lyft and Uber, the big concerns are that these two are obviously going to be going toe-to-toe, fighting each other for not just the attention of Wall Street investors, but also for customers, for people that need to go from place A to place B. And that is something that I think could potentially hurt profitability chances for both companies.
Right, Paul. Finally, the battle between the NYSE, the NYSE, and the NASDAQ to get them. Lyft has gone to the NASDAQ. Would you expect Uber to go to the big board?
Yeah, as Zane pointed out, there are indications that Uber is considering a New York Stock Exchange listing, which will be, a feather in the cap of the NYSE, which of course is still getting a lot of companies, not just new startups, but Levi Strauss, a very old company, 166 years old. In fact, the jeans giant just listed downtown, last week and did quite well. So I think the NYSE still is very competitive with IPOs and not just for these tech startups.
And finally, GDP numbers, which do demand our attention. What are they telling us about the strength of the U.S. economy at the moment?
Yeah, I think it's telling us, Richard, what we kind of already knew from a lot of companies that have reported earnings and also from some other data points like retail sales and inflation numbers. The economy didn't do as well in the fourth quarter as originally thought. They had to revise the GDP numbers downward to about 2.2%. That's not awful, but it does raise some concerns about an economy that is slowing. And there are, legitimate worries that the first quarter is not going to be very good either. But the first quarter hasn't been good for the past couple of years, so people will probably be quick to write it off as maybe just a seasonal slump and that things could maybe rebound later in the year.